Just going back there now to some of the participants potentially in Bitcoin now with the ETFs and the familiar wrapper that they are, the high net worth individuals, the family offices, a lot of them come from a value investing perspective. I know I was certainly a value investor or pseudo value investor in my day. If it didn't have a cash flow, it was hard to see what the valuation would be. How would you? I mean, I'm not saying that you would necessarily try and sell Bitcoin, but how do you talk to these types of folks about Bitcoin, the conservative, traditional value investor, or somebody who's enjoyed a really good run in equity markets and looks at Bitcoin as some sort of speculative technology stock?
Yeah, there's a few ways to think about this. I think the first thing is to understand that Bitcoin is a new form of money, and most people, as you mentioned earlier in the show, don't really understand why money has any value. Most people haven't thought about the history of money and why is it that, say, in the US we use dollars, that they don't dollars have existed for most people's entire lifetime, and they don't know that dollars were once backed by gold. That backing was removed completely in the 1970s, actually removed partially in the 1930s. So, but to understand why money has value, that's a deep rabbit hole. We can talk about that. And once you understand why money has value, then you can start understanding why Bitcoin has value because it is a superior form of money. But you can also look at this from the historical perspective and just look at the performance of Bitcoin and say, as a value investor, why would I put any of my savings into Bitcoin? Well, it's pretty interesting if you look at it. If you had a portfolio that was 2% Bitcoin, which is a tiny fraction, and 100% cash. So very, very conservative. So no risk at all, just cash. You would have outperformed the Standard Poor's index for the last, I think, 5, 6, 7 years. So what this is saying is that there's a benefit of having an asset in your portfolio that is not correlated to anything else. And this is true not just for Bitcoin, it's true for gold. Most people don't have any exposure to gold. And if you look at an analysis of adding gold to a portfolio, it has this effect of both reducing volatility and increasing your compounded annual returns over time. So it makes sense just from that perspective. Even if you think, hey, Bitcoin is this crazy volatile asset and I'm scared of it, the way you handle something like that is if you have fear of an asset because it's volatile, all you do is you position you change the size of your position, your allocation to the point where you feel comfortable. You can't handle a volatile asset with this 10% of your portfolio, make it 1% of your portfolio. The only allocation to Bitcoin that I think makes no sense at all is zero. There is a probability that this does become global money. It's already on the path to becoming a global store of value. If it becomes the global reserve currency, as I believe it will, it's going to increase in purchasing power massively. It's going to go 100x from here. So there is a risk to not having any exposure to that. If the world re-standardizes on a new form of money and you've had no exposure, you kind of get left behind all the people who did have exposure to it. So I think it really makes sense just from the perspective of reducing volatility in your portfolio, increasing the returns of your portfolio. And if you feel fearful or you don't fully understand it, I think you just need to size your position to the point where you don't feel stress anymore. And most people, I think, could handle the stress of 1% of their portfolio in Bitcoin because most people, their portfolios, move 1 or 2% every day just based on market fluctuations, your stock and
Yeah.
bonds moving around. So a 1% allocation isn't scary. And I think most people, once they start there, they start learning about Bitcoin, they go down the rabbit hole a little bit, they start understanding what money is, why does it have value, and then as they become more comfortable and understand why this is a profound innovation, they start increasing their allocation to 5 or 10%. And then some people, the allocation gets much larger than that because it just grows over time. It's sort of programmed in a way that it grows in value because its supply is limited and its adoption's increasing. So you combine those two things and you get a price rising continually over time.